Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday, the 28th of July, 2022. I want to remind everybody, this weekend will be my last videos for several days. I was supposed to do this 9 months ago. It was a whole story, but I have to have some oral surgery, and I wish it was only a root canal. That's not what I'm going in for. I won't be able to talk for a while. If you've ever had oral surgery, they stitch you up and your mouth is tender, and if you start talking, you bust all the stitches. So it's going to be a couple of days. I don't know how many. I haven't gone anywhere. I'm going to be fine, I'm sure of it. But got to go through the process, and they just called me. It was, I think, yesterday or the day before, and after 9 months, I've got the surgery set up, and away I have to go. And yeah, it's in a hospital, the whole darn thing. But I get to go home later that night. So that's the good part. But you're not going to hear my big mouth for a while. So let me give you what I think's going on and help. I think we're being sold the idea by the Fed and the Treasury and the Biden administration that the fact that labor market is so strong that even with 2 consecutive quarters of GDP falling, the market is not tipped into a recession. Not going to argue. As an academic, and I'm partially that, I get it. That means it's stagflation. It's got to be something. If you got a slowing economy and inflation has been persistent, it's that. Their argument is inflation is peaking, and we'll see that in forward numbers. Okay. The markets are rallying because it also means then that the Fed can stop this tightening phase sooner rather than later. Certainly, maybe by summer of 2023 at the latest. But how far can they go before they tip the economy further because it's weakening already? So some traders think, they can keep tightening, but instead of 75, maybe we're back to the 50 and a quarters. That's what I think is going on. So the headwind of the Fed not being as aggressive has released a torrent on the market. We're seeing earnings, and earnings as a whole are coming in better. Companies have done well. If you saw Apple, nice job by Tim Cook. Difficult market in China. He did beautifully. Intel did terrible. Comcast, terrible. Roku, fire everybody there. I mean, this is how you look at it. You got to see which ones are working, which aren't. But as a whole, that's why I think you're looking at the GDP fell, and the reaction would normally be 2 of them to the downside. And it's because we're being sold on the idea. I didn't say we're being sold a bill of goods. We're being sold on the idea that the Fed won't have to be as aggressive. And the market's looking, and that's what markets do. They look forward and they go, okay. And they're looking at it in part. What are the bonds, the notes, what are they all doing? We dropped mortgage rates today to 5.3%. You can't get away, though, from certain factors on a chart. I think we're at a top area. Why? Let's get to it. If you look at the S&P, all you've done is come back to the 18-week average closes on a weekly chart. Resistance. 1 second here. Let me take a glass of water. Okay, now we're in better shape. I'll talk a little bit here. And that's still this COVID. You have the uptrend, higher lows, higher highs on the swing line. The next resistance, now remember, we just looked at a weekly chart, and here's the 100-day average. A lot of resistance here. The 200's a lot higher. I'd be surprised you're going there. Anything can happen, but I'd be real surprised. And lo and behold, here's my pal. You've got the combination of the 100-day, you've got the Bollinger Band, you got a Friday afternoon after a big rally. I think the pros are going to take money off the table right now. I'm not saying I'm bearish. I think they're going to take money off the table right here, right now. NASDAQ, identical thing, right here, right now. Dow Jones, identical. This is the futures tonight. They're open right here, right now. Russell, I made a mistake. I went too fast. Right here, right now. And obviously with all this, the VIX is going to feel some pressure, and it's come back down right through there. Do I think the pros bailed? Not yet. I think they see what I do, And if we get the reversal, they'll be in pretty good shape. They'll get a reversal out of it. I wouldn't sell the VIX down here, but I'd be watching. We then get to the 30-year bond. Look at what it's fighting at. It's fighting between the support that it developed back here once it got over the 100-day average and the Bollinger Band. It really hasn't gone anywhere. And it's using that as support to keep fighting between the two. You're not embedded. I think this market's going to sell off from here. The 10-year note, the same thing. Fighting. First, it got up here, and that's where I think the smart money came out of the market. I realize it went higher. You can't catch tops or bottoms. You're looking for a slice. And you're fighting that right now between these two. I get it. The trend is up, but you're overbought. Dollar index, you're narrowing in these Bollinger Bands dramatically. I wish I could tell you which way the next move in the dollar is. The market doesn't know. You're not getting an answer here. You have a higher high, a lower low, battlegrounds between the 18-day average, and you haven't hit the lower Bollinger Band or the upper Bollinger Band since mid-month. You've just been drifting. Can't answer the question. And the same identical thing in the euro as the market is sitting back and narrowing in those bands. Everybody's looking, what's the next trend going to be? In the British pound, you're overbought. You're at the upper Bollinger Band. You don't think I think the pros are coming out? Not in a small way. I think they're abandoning the long position here. I could be wrong. That's what I think. Bitcoin. Time to get rid of the July, which we did. You're back into the resistance. This market ended this downtrend when you lost the embedded reading, right through here, and we were right on top of it in these videos. Now, I haven't said buy or sell recently. It's too difficult in this wave. I don't see a trend trade that's set up there. When I look at Brent versus WTI in the October contracts, well, you've certainly been on an uptrend. You're backing off, but big support's back at the 570 level, not 701. When we look at October Brent, overbought. This is, to me, going to be something of a big resistance between the 100-day average, the upper Bollinger Band, but the trend is up. It's not down. It is still up. You'd have to get back under 98.83 to stop the uptrend. Okay, is it overbought? Yes. Do I think the pros are buying it? Absolutely not. I think they're using the 100-day average to liquidate some long positions, but they're not bearish. September WTI, because this is still where the action is in the U.S. futures, for WTI, this is your support zone. It is not overbought. I think there's buying here with stops under 94.30, looking for the resistance at the 188 to 102.40 area. Rebob gasoline, I don't have a handle on it. It's not doing enough to get excited about. Nat gas, I do have a handle on it. Let's take a look together at this, because what the market did is interesting. It was embedded right through here. Embedded means both the red and the blue lines have been going sideways for days over the 80 level. When you get a reading that's under it, and it's under 79, it's called abandoned ship. You've lost the embedded reading unless the exact next day, the market gets both numbers back over 80, in other words, the red one in this case. If not, the odds favor you're going to make a run to wherever the closest main moving average is, and that's where I'm at right now. Now, I realize you're going to tell me about all the heat in the market and so on, and I'm buying it. I didn't say the trend isn't up. You've lost your upside momentum. And often, unless you go back through the 941.90 level, prices try to work back to that 18-day average. It can take a while, but it's also, to me, a key that now you're just overbought, and overbought doesn't attract new buying money. That's how I look at the markets, and that's how I try to factor in these things for you, trying to come up with game plans. But there's more to it. You know, I use pivot points a lot. Now, if you don't know what a pivot point is, let me explain my history with it. One of the best minds in the charting arena, has been around a long time. The fellow got himself into some trouble with CFTC and other things. I'm not going into that. Doesn't mean he didn't come up with a good trade idea. The trade idea has stood the test of time, but not the test of this individual, in my opinion, got too big in the market positions for the markets before they became electronic and this developed. But the idea has been there, and it's no different than a moving average. Once you have a good flow of an idea, you can improve on it. I did that with Bollinger Bands, John Bollinger's, and I did it with this gentleman's. And what I do is I add the slow stochastic study to them so that you understand timing with price. Now, you have pivot points. Yeah, open up your charts, look at your technical indicators. If you have a good charting software package, you have them. Do you know how to use them? 3 free videos, the course. I want to show you how I teach. Maybe you get something out of it. You're going to learn how to apply the 3. I will teach you what is the pivot point, how to use it from my perspective, and how to use timing with it. And what do I use it for? I'm not a day trader. Sometimes you can get an edge on entry between other things I teach in this, or exit. That's what I use it for. So call us, go to our website under free offers, or just move your cursor right to the top here. An icon will appear. Get the course. I'm Ira Epstein. You have a good day.